Okay, so we're doing the balance sheet, which is also known as the statement of financial performance. Right now, this is the May-June exam paper, May-June 2022 exam paper, which was written by the Matric writers, Matric rewriters in 2022. Right now, we're doing question 1.2.2, which deals with balance sheet. Right now, we read the required. The required says, so that's the most important thing. Every time you answer accounting questions, you must start with the required. The required says, prepare the statement of financial position in bracket balance sheet on 28 February 2022. Right. So, firstly, you must take note of the financial year end, 28 February 2022, which means anything beyond that period need to be taken into consideration, need to be taken note of, because if, for example, an expense was paid beyond 28 February, it means it is a prepaid expense. If an income was received for a period beyond 28 February, it means it's income received in advance. And if anything was not paid or was not received within that period, then it means it's an accrued item, either accrued income or accrued expense. Now we're doing the balance sheet, so we start with assets, right? So the first item under assets is non-current assets. So I'm just gonna write NCA, non-current assets, which are divided into two, tangible and intangible non-current assets, right? Tangible and intangible. Now let's look at the information. So we are going to go through the information as well as the adjustments. So on information A, they gave us an extract from the accounting records. So you've got the balances for 2022 and 2021. The balances for 2022 are the closing figures, the closing balances for the period. Then the balances for 2021 means that it's the opening balances for 2022. Right. Now let's go through the information. The first item is fixed deposit, right, which falls under intangible. So we've got fixed deposit, right? Now the fixed deposit is 489, but before we write anything, we need to go through the information that is given. So we'll go through the information. So I'm just going to put a colon here instead of a bracket, a colon. So we've got a fixed deposit. So let's go through the additional information. On information B, there is a capital, share capital and dividends, right? Talks about share capital and dividends. Then on information C, talks about income tax and net profit. On D, talks about the provision for bad debts, which affects debtors, and then audit fees, which affect which affect expenses. If they are not paid, it will affect current liabilities. If they are paid in advance, it will affect current assets. It's an prepaid expense, accrued expense and prepaid expense. Then tenant, okay, that information relates to rent. If it's not paid, it's accrued income under current assets. If it's paid in advance, it's accrued, it's prepaid, it's income received in advance under current liabilities. Then on E, we've got fixed deposit. So it says 240 of the fixed deposit will mature on 1 April 2022. So you check 1 April 2022. How many months between 1 February, between 28 February 2022 up to 1 April? So you only got March. So it's February, March, then it's April. So it means there's only 1 month. And therefore that fixed deposit of 240 becomes a short-term portion of fixed or current portion. So we're going to say 489 minus 240, right? Then we have our fixed deposit, right? 489 minus 240, it's 249. So it means our fixed deposit is 249. Then we go through the information. Okay, so the other information on the adjustments relates to debtors and creditors. That is information F. Then information G, relates to the current ratio, which affects current assets and current liabilities. So if you've got current assets, then you can calculate current liabilities. If you've got current liabilities, then you can calculate current assets using that current ratio. Then the other one relates to debt equity ratio. So if you've got equity, you can calculate non-current liabilities. If you've got non-current liabilities, you can calculate equity. Then you've got loan. That one relates to the loan, so it also affects liabilities, right? Now we'll go through that information one by one, but before we go there to the adjustments, let's go through the first information, the extract from the accounting record. So we've recorded fixed deposit. The next item is ordinary share capital, so it's under equity. We skip for now. Retained income, it's under equity as well. Then we've got loans, which is under liabilities. We've got SARS, income tax, which affects current assets and current liabilities. So we look at that when we do current assets and current liabilities. Then creditors control affects current liabilities. We've got shareholders for dividends, it's current liabilities. Debtors control, it's current assets. Provision for bad debts, current assets as well, affects current assets. Trading stock affects current assets. Petty cash, current assets. Bank overdraft affects current liabilities. So it means we're done with non-current assets. So we'll take current asset. I'm just gonna say CA, right? So I'm gonna say CA. So that's your non-current assets. So in CA, the current assets are already given on the answer book. Remember, you've got an answer book for each and every exam. So if the figures are already given as in the answer book, it means you must use those figures to calculate the other figures. You use those figures together with the information in the question paper to calculate the other figures, right? Now, current assets are given as 280. So it means we can use that information, 2,080,000. We can use that information to calculate current liabilities. So here I'm just gonna say current liability. I'm gonna leave just enough space, then I'm gonna start current liabilities here at the bottom. Current liabilities. So if you have current assets and the ratio, then you can take current assets and you divide by the ratio. The ratio is given as 1.6. So you say 2,080,000 divided by 1.6. Then you've got 1,300,000 as your current liabilities. Right. Now, it means you have your current liabilities. Then you need non-current liabilities as well as but you don't know what falls under current liabilities as yet. So you still need to calculate the individual items under current liabilities. So here we'll have non-current liabilities. So I'm gonna say NCL, non-current liabilities, which consists of a loan, non-current liabilities. Then you already know that you've got a loan, right? And you already know from information that you have a current portion for the loan, right? or let's say short-term loan instead of current portion. We say short-term loan. Short-term loan, right? Okay, now let's go through the information. You've got we are on current assets, right? Now you've got debtors control, right? The first item is debtors control. Oh, sorry, before debtors control, let's take the current portion of the fixed deposit. So we'll say short-term fixed deposit. So the short-term fixed deposit is the one that we subtracted above, is 240,000, right? Now let's take debtors. The next item will be debtors control, right? Excuse me. So the debtors control is given as 875,000. You know that in the information they also gave you information about provision for bad debts, as well as the information that must be transferred from debtors to the creditors. So on information D, they said provision for bad debts must be increased by 2,610, right? So how much was the provision for bad debts? For the previous, say it was 23,640. It means you must also subtract 2,610, right? Then let's look at the information that talks about debtors as well. On information F, they said a debit balance of 17,950 from the debtors ledger must be transferred to the creditors ledger. So we're going to also transfer that. When we transfer, you subtract it, 17,950, right? So we're done with our debtors. Alternatively, on the provision for bad debts, you can add the two amounts to calculate the provision for bad debts for the current year, because they said it must be increased. So it means you can either take 23,740 plus 2,610, you add them together, then we subtract the total amount here, right? Now let's look at the information. Let's continue with our information from the extract, right? After debtors control, you've got provision for bad debts, which we have dealt with. You've got trading stock, right? So we take trading stock. Trading stock, they say here in bracket, it's a balancing figure. So it means for now we don't worry about it. And then we take petty cash, right? Petty cash is how much? It's given as 5,000. So we say 5,000. We also have, okay, then we have information that we don't know whether it's a liability or income. So that one is SARS, right? So under workings, we'll say SARS 450,000. It's a provisional tax, right? So it's a provisional tax. Then you must compare it with the tax information that you have. So you go to information number C. Information number C gave you, they gave you information for income tax. It says income tax for the year after taking into account all adjustments amounted to 438,000, right? This is 30% of the net profit. So it means when you want net profit, you take income tax and then you calculate the net profit. Now let's compare this with 438, right? 1,000. So this is income tax, right? We were supposed to pay 438, but we have paid 450 provisional tax. then it means we have overpaid 12,000 and therefore SARS owes us, right? SARS owes us 12,000 and therefore it's an asset. So we will have SARS under current assets. We will say SARS income tax. Then we'll write 12,000 there. Right. Now the bank is the bank overdraft. We've got, okay, let's calculate debtors. So our debtors is 875,000 plus 23,640. Sorry, it's minus 23,640 minus 2,610 and then minus 17,950. So our debtors balance will be 830,800. Then we are left with the trading stock. Now let's go through the information. Remember, there was information that relates to rent and relates to expenses. So let's see if that information is prepaid expense or accrued income or what, or accrued expense and income received in advance. So information D says, bullet 2 says only half the audit fees were paid. The balance will be paid in March 2022. So March 2022 is on the next financial period. It means in the current period, the audit fees were not paid. So under current liabilities, let's go to current liabilities and write accrued expense, right? So accrued expense is the audit fees. They say half was paid, which means the other half was not paid. So the amount that was paid is also equal to the amount that was not paid. So we write 48,000 under current liabilities, right? Now still on the information, on information D, they talked about rent. Let's see what they say. The tenant occupies part of the premises from 1 May 2021, right? In the current period. He has not paid the rent for January and February, right? So this is information D on our workings. This is information C. Tax is on information C, right? So in information D, if the rent was paid from May 2021 up to, it means it was paid until December, because January and February was not paid. So we count from May, June, July, August, September, October, November, December. That's 8 months, right? So it's 8 months, and therefore it means the rent that we have is for 8 months. So January, February was not paid, so we must calculate for January and February. Rent income was 102,400. So we will divide that amount by 8 and then we multiply by 2 because we want it for 2 months. How much do we have? Right. So we say 102,400 divided by 8. So the rent for 1 month is 12,800. Then we say times 2 because 2 months were not paid, 5,600, right? So 5,600 is accrued income. It's income that was not received, which was supposed to be received. Accrued income, it's 25,600. Sorry, this is 600. So here you can just say refer to C, and then here you say refer to D, right? Or you can just write the workings because the workings are not long. On income tax, you open a bracket, you say 450 minus 38. Then on accrued income, you say 102,400 divided by 8 times 2, right? Because it's not long. Now, if you if you wrote your workings, you must always refer the marker to the workings, right? It means you must number your workings according to the adjustments. Then you always refer your marker, the marker to the adjustments. Now we've got your assets. Then the only thing you don't have there is the trading stock, which they said it's a balancing figure, right? Okay, so you just leave one space in case you left something out, right? Then you'll have your total assets here. Total assets, right? Now, total assets, then you must subtract, still on current assets, you must take the total assets, the total current assets, 2,080,000, you minus all the other items. You minus 240,000, you minus 830,800, you minus 5,000, you minus 12,000, you minus 25,600. Then how much do you have? You will have 966,600, right? Now, now let's look at the information that you have, the other information that you have, right? So we look at the information that you have. Okay, so okay, now we go through the other information. Let's see if we got these figures correct. Okay, just confirming the calculations. Okay. So the other information that you have, so it means we must go through information A as well. So the other information that we have, we start from the top again. We have ordinary share capital and retains earnings, which are already given on the answer sheet. So we'll have equity and liabilities, right? Then under equity you'll have equity, right? Then under equity you'll have share capital, ordinary share capital, I'm gonna say OSC, and retained earnings, then I'm gonna say RE. So it's already given. The ordinary share capital is 7 million. It's there. Is the closing balances that you have, right? 1,196,000, and the total is for equity. The total for equity will be your 9,150,000, right? Now we do non-current liabilities, so I'm gonna say NCL. Then remember, on non-current liabilities you've got your loan, right, which they talked about on the additional information as well, right? Now let's go to the additional information. So on the additional information, okay, how much is the loan? The loan is not given, the opening balance is not given, and the closing balance is not given, right? So let's go to the information that talks about the loan. So on information G, they gave us the current ratio and the debt equity ratio, which means we can work out non-current liabilities using that ratio, the debt equity ratio. Remember, we have worked out current liabilities using the current ratio. So on information G, we take the okay, let's just rework out the current ratio. So current ratio CR is equal to current assets is to current liabilities, which is current ratio is 1.6 is equal to current assets were 2,080,000 divided by current liabilities. You don't know current liabilities, you can just give them x. Now solve for x. We're going to take x and multiply on both sides. Then on the other side we will have 1.6x is equal to 2,080,000. Then we divide by 1.6 on both sides. Then x is equal to 1,300,000. So x is your current liabilities, right? Liabilities. So we just substituted current liabilities here. Current assets divided by current liabilities is equal to current ratio. Now, still on the same, on information G, let's take the debt equity ratio. So the debt is to equity, right? So it is equal to 0.4. It's given. Now, how much is the debt? Debt means current liabilities plus non-current liabilities, all divided by equity, right? Then they are equal to 0.4. It's given. Now let's substitute. Current liabilities is 1,300,000, right? Plus non-current liabilities, we don't know, divided by how much is equity? 9,150,000, right? Sorry, it's debt. So current liabilities are not there. Sorry. It's debt. So we're just going to say debt. How much is our debt? We don't know, so we give it x, divide by liabilities. So divide by equity. How much is equity? 9,150,000, right? Is equal to 0.4. Now we work out x, then x will be equal to we say 150 9,150,000 times by 0.4. Then our x will be 3,660,000. 3,660,000. So this is our non-current liabilities, right? Then we come here, non-current liabilities will be 3,660,000. The total also is 3,660,000. So it means our loan at the end was 3,660,000. And then what do? We remember they said short term will be paid in 2023 financial year. So okay, let's just jump to information H. Information H says the loan from XY loans will be reduced by a capital portion of 228,000. So that one represents short-term loan. So we're going to subtract it from the long-term loan. So we're going to subtract 228,000, which means the 3,660,000 that we have at the end is after you have subtracted 228,000, meaning before that it was 3,888,000, right? Now we take that short-term portion, we write it under current liabilities, 228,000, right? Okay, Then we continue with our information. Let's go back to information A, to the extract, right? So the extract, we're done with equity, we're done with non-current liabilities. Now we're focused on current liabilities. So we'll go through the information. Provisional tax we've already covered. Now we have creditors control, right? Creditors control is, we open a bracket, 617,450. Remember they said we must transfer a balance from debtors to creditors. So you will subtract it on debtors, and then it's a debtors balance, and therefore when you transfer it to creditors, it will decrease the creditors 17,950, right? So it's like setting off a liability from an asset, or an asset from a liability, right? So our creditors will reduce by 17,950. Do we have any other information that relates to creditors? So if you go through the information for creditors, there is none. So we're just gonna subtract 17,950, and then we've got 599,500 for creditors. Then we go through the information again. What else do we have? We have shareholders for dividends, right? Which means the dividends that were not paid at year end, we owe shareholders, so we're going to pay them in the short run, and therefore it's a current liability, so we write it under current liabilities, 213,400. And then we've got bank overdraft, which is also given in the information. Bank overdraft, right? So our bank overdraft, they said it's a balancing figure, so we don't know how much. We just put a question mark next to it, and then we look at the information. We are done with the extract. Now let's go to the adjustment to see if we have covered everything in the adjustment. Information B relates to capital and dividends, so it's not affected. Then information C we have already covered. Information D, we covered provision for bad debts. We covered, okay, audit fees for 48,000. It's accrued expense, so we'll have accrued expense. Accrued expense 48,000. Remember they said half was paid and the other half was not paid. So we'll have 48,000 there, right? Now, what's the next one? What's the next one? Rent we have already covered. Information E we've already covered. Information F we just covered. Information G is already covered. Information H is already covered, which means we're done with our current liabilities as well. But let's just leave one space in case something comes up. Now we have total equity and liabilities. So we will see if equity and liabilities are equal. Then if they are not equal, it means we must find tangible assets, right? Now we take 1,300,000. Remember, we're calculating the balancing figure, which relates to the bank overdraft. So we take 1,300,000, which is the total for current liabilities. We subtract the short-term loan. We subtract accrued expense. Oh, sorry, accrued expense, we've recorded it twice. So I'm just gonna stretch it. I'm just gonna scratch it here. We've recorded it twice, right? 48,000, and then we subtract creditors 599,500, and then we subtract 213,400 for shareholders equity. Then the balance becomes 211,100. So sorry, it's here 211,100. So that's your accrued, that's your bank overdraft, right? Let me just wrap here. That's your bank overdraft. Now it means we are done with current liabilities, non-current liabilities and equity. Now let's just add. We add the totals: 9,150,000 for equity plus 3,660,000 for non-current liabilities plus 1,300,000 for current liabilities. So we got 40,110,000. So total equity and liabilities are also equal to total assets. So we also write it there. Now we need to find the balancing figure for tangible assets. So we say 14,110,000 minus current assets 2,080,000 minus fixed deposit 249,000, right? So just say minus 2,080,000 minus 249,000. So our total is what? 11,781,000. Then we add it to fixed deposit to get the total for non-current assets. It's 12,030,000. So that's your total for current assets, right? Now it means we are done with our balance sheet. Now I just want to highlight something, right? If you see here, I have written everything independently. Under current assets, I've got many items. Under current liabilities, I've got many items. Now I need you to take note of this, right? You must combine debtors. You combine it to accrued income, right? Debtors, accrued income, as well as the tax payable to the company. Anything that has to do with us receiving income in the future, then you must add it together. Debtors, our customers owe us, so we'll receive income in the future. SARS owes us, we'll receive income in the future. Accrued income, the tenant owes us, will receive income in the future, right? Now we call it the trade and other receivables. So for grade 12 learners, you must combine these items. You combine debtors, trade debtors, you combine prepaid expense, all the prepaid expenses, you combine accrued income, right? So it makes up your trade and other receivables, right? If you see here, I've combined all of them, right? Now you also have this one, so I'm gonna use the X on this one. You must add these two together to get what we call cash and cash equivalents. Cash and cash equivalents, right? So you add the short-term portion of fixed deposit you add it with the petty cash as well as bank. So it's petty cash, it's bank, and it's short term fixed deposit, right? Short-term fixed deposit. Now let's go to liabilities, right? On liabilities, you've got your creditors. Let's start with creditors, right? You must add creditors to accrued expense, right? And then you add it to the bank overdraft, right? And then what else? You add it to the bank overdraft, and the short-term portion of loan, right? You add the short-term portion of loan, right? Sorry, no, the loan you record it separately. So you add these three. The loan you must record it separately as a short term. It's not a trade payable, right? You record it separately. So that's your trade payables. And then shareholders for dividends, you record it separately, as well as the short-term loan. So let me just write it down so that just like the others, I'll write it down here. For trade payables or trade and other payables, you've got creditors or the creditors control. Then you've got your accrued expense. Then you've got your bank overdraft. Sometimes the bank overdraft is recorded separately, so you can just record it separately or you can include it there. And then the most important one is the income received in advance. Most important one is the income received in advance. So here I will just leave a question mark because you can record it separately sometimes. But these three you must always add together to give you your trade and other payables, right? Then the bank overdraft can be recorded separately, as well as the dividends and the short-term portion, right? So let me scratch it out so that you take note of it. Then the rest must be recorded there. Now, what do I need to explain? In summary, you must take all the amounts that you have in the question and in the answer book. You must add all that information together. I mean, you must use that information and you put it in the answer sheet, right? If there are totals that are already given, write them down before you go through additional information. So you go through your trial balance. If they give you a trial balance, you take the first item. If it falls under assets, you identify assets, the first asset. Then you go to the information, additional information, to see if there is any adjustment that talks about it, that affects it. For example, we have taken the first item, tangible assets, and we go through the information. We didn't find the tangible assets, so we went to intangible assets, which is the fixed deposit. We took it and then we went through the additional information. We identified a current portion. How do you see that a fixed deposit is a current portion? You see it when it will be received within a short period of time, when that fixed deposit will be received in the next 12 months, which means when the year ends, you must count 12 months. If it will be received within that 12 months, then it's a short-term portion. Same applies as the current liabilities. On the loan, if a loan or a mortgage bond or a bond will be received within the next 12 months, it relates to a short-term portion. It's a short-term loan. Now, or a current portion. We call it a short-term portion or a current portion. Now, I want us to go through to information H quickly, adjustment H. On H, they said the loan from XY loans will be reduced by a capital portion of 228,000 in the 2023 financial year. Remember, we are on 2022 financial year, which means in the next 12 months, it will be reduced by 228, and therefore that 228 is a short-term portion, is a current portion of the loan, right? So that's why we separate it from the long-term loan. It's not a non-current liability because it will be paid within the next 12 months. A non-current liability is a liability that will be paid in a period exceeding 12 months. Same as assets. Assets, your non-current assets are assets that you will have, that you expect to have for a longer period than 12 months, right? Then current assets are assets that you expect to have or to keep within a 12 months period, right? So your debtors, you don't expect debtors to last for more than 12 months. You don't expect inventory to last for more than 12 months. You don't expect petty cash to last over 12 months. You don't expect to owe SARS over 12 months. Now, still on SARS, when you have paid less than you owed, it means you still owe SARS. You must still pay more in order to settle the total debt. And therefore, that item will relate to current liabilities. Remember, here it's a current asset. So when you owe SARS, it's a current liability, and it must be added on trade payables. Remember, I said, so I'm just going to say SARS, income tax. So when we owe SARS, we add it to trade and other payables, right? Then when SARS owes us, we add it on trade and other receivables, right? I'm just going to say SARS here. So on trade and other receivables, you also include SARS. Then on trade and other payables, you also include SARS. So you look at the tax expense for the year, you compare it with the amount that was paid during the year, right? Then if we have paid less, it means we still need to pay more. So we owe SARS, it's a current liability. If we have paid more, SARS owes us, we have overpaid, and therefore it's a current asset, right? Now we are done with this balance sheet. Remember, this question paper is May-June 2022. It was written by the Matric rewriters in 2022. So this is the end of this session. Please comment on the comment section. Tell me what you think about this session. Ask questions. And if you need assistance, maybe one-on-one assistance, also comment, and then I will reply to your comment. Thank you so much for watching this video. Please subscribe to the channel so that you can get access to more to other questions as well. And please make sure that you click on the notification button that you see so that you can get notification every time there is a new video. This series continues. I will cover all the other question papers as well, and I will also cover all the other topics, right? Income statement, I will also cover inventory, I will cover manufacturing, I will cover VAT, I will cover governance, corporate governance. I will cover internal control. I will also cover cash flow statements. I will cover all the other topics as well, right? So please make sure that you subscribe so that you can get access to that information, right? Thank you so much. Cheers.